Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you've been following along each and every week, you'll know that I keep my lines on the chart from the previous report so you can see how the technicals worked out. Now, as we zoom in here to this particular daily candle chart, you'll see that my forecast from last Friday was that we would move lower. And while we did move slightly lower, we have not yet hit our target. And I say not yet because if you look at the technical signals, the stochastics are still showing downward momentum, and the CCI, which is the Commodity Channel Index, is still showing downward momentum. So my forecast for next week is that the Dow Jones Industrials will move lower, and I'm just going to move this line over. I'm actually just going to mimic that right over, just like that. I'm going to move it over in parallel to that, and then I'll erase this. I do think that we are going to move lower and break out below the 20-period moving average. We just have to, again, keep an eye on that moving average because right now it's acting as a support level. As soon as we get one single day closing below that moving average, you'll most likely see an increase in volume, and the stochastics and the other momentum indicators will start to move lower as well. Now let's move right to the VIX. I said that the VIX would most likely rally, and guess what? We didn't do that. In fact, we went lower, but look at what's happening with the VIX. This is a key support level that I'm going to extend all the way to the right, and you could see that the stochastics, which again measures momentum and the closing price relative to the range, you'll see stochastics is starting to move up. And it's gone from a downward direction, it's flat now, it's starting to move up. So my forecast for the stochastics is that we're going to start moving higher as well. Now, if the VIX is expected to move higher, and I'm just going to move this over like that, then what does that mean for the S&P? Well, they're inversely related. So you have to keep an eye on the S&P because the VIX as a leading indicator gives us an indication as to the buying and selling pressure. So keep that on your watch list. It's a great indicator. We combine that with volume analysis and the CCI being the most sensitive out of all the indicators, and I think that will really help you. Now, if we look at the Russell 2000, which is a more broad-based index, I think we're going to see a different picture. We did not hit the target level. However, we had a good, strong green candle today. So I think next week, the Russell 2000 can actually go up before it goes down. A little bit different than what we saw with the S&P and with the diamonds. But notice what's happening with the stochastics. Let me crunch the scale down here on the right. You'll see that the stochastics is still going higher, and we're right on the border of it being overbought. CCI over the plus 100 mark is by definition overbought, but I think that these indicators will continue to go higher, and then we'll see a reversal and eventually move lower. So I'm going to analyze that next week. I'll leave that line in place. I'll leave these lines in place, and it'll give you a good idea or reference as to where support and resistance is. So that's the analysis for the Russell 2000. The Qs, kind of the same scenario as what we had in the Russell 2000. We did not go low. We did not hit the targets. However, if you notice, we have a green candle on lower volume while the CCI is showing one of the highest readings it's had in months. Now, this is an extremely overbought condition, so I think the CCI is going to start to pull back. And right here, right where my cursor is, once that line starts crossing down below the plus 100 mark, it will then generate a sell signal. So I think that the Qs could still go slightly higher, and I'm just saying maybe Monday or Tuesday will go higher, and then we'll start to pull back. Eventually, I think we'll break down and break out below that 20-period moving average, but it's still too early to tell. keep an eye on these momentum indicators and make sure you set your stops accordingly. Last week, I mentioned that we had 2 open spots in our mentoring program. We now only have 1 open spot. So if you're interested in that, just send me an email. Just go aj@themarketguys.com. Let me know that you might have an interest, and then we can talk about it to see if you're qualified. If you are, we can set you up with a start time and get you going trading options, equities, whatever you like. That's what the mentoring program is about. So with that, have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.